when are we opening? We're opening in 50 seconds. 1 second, ladies and gentlemen. Just need to get all the outlets opened up. And the last one here is divergent. Okay, so I think I'm live on everything. And finally, I just want to check the settings in Telegram. Sometimes they play up a little bit. Okay, I think we're all good. So live on all three. Good morning, Europe. How are you? I hope you're well. So it's Thursday, and yeah, we are live. Good to go. Okay, good morning. So it's Thursday, and we got ECB coming up, and yeah, I wanted to show you some slides. If you have my software, you'll see the flags are showing up. What events are happening later on? And so in the DAX, we got a small gap down. And in the FTSE, we had a little bit of a gap, but that's been immediately filled. I took a position in the FTSE just before the open. I'll probably close that momentarily, I imagine. And today I'll be trading 20 and 6, and the account is pretty much where we left it yesterday. So we're good to go. My voice quality is apparently very bad this morning. I'm not so sure. You're the only one who's complained. So we filled the gap really quickly. And I think the early birds that are getting rewarded for buying up the DAX. what I'm going to do is I'm going to take you through. So while we are observing this, I want to take you through the research that I did. Let me just no, I don't very often share what goes on that much behind the scenes. So I thought, okay, maybe today would be a good idea to do that. I want to I want to address something. I get up around 4 or 5 o'clock in the morning, so a little bit depending on when I went to sleep, and I do that most days. And my mornings are sort of fairly routine based. You know, you exercise, you eat the frog early, right? You get the shitty things done quickly without thinking too much about it, and then you prepare for the trading session. And for example, for example, I come here a couple of times a day, and I talk to you about how I trade, and I place trades with you. But it's fair to say that you see the tip of the iceberg, because I don't want to stream all day. My limit is approximately 2 hours per session, and oftentimes I will only stream for about an hour. But that doesn't mean that I don't trade the other time. So let's just give you an example. If you look at the, say, dollar yen yesterday, I was on this move down, and I really pressed the market. And this bar that you're seeing here is what I call a road sign. It's basically just a in Danish we call it a vejviser bar. It's basically just to me, these bars here, they're significant because they will often be a harbinger for what is yet to come. And I really pressed the position behind the scenes on dollar yen yesterday. So there's many things that I do sort of behind the scenes that I don't share, not because I don't want to share it, but just because I think I've set some limits to what I want to do with public engagement, because with the public engagement also comes a responsibility. I feel that there comes a responsibility. The responsibility of, well, if you do point out trades, you got to manage them. Because if you don't, then you're going to get an inordinate amount of people who will just be left guessing on, well, what's stop loss, what's profit target, how do you manage the position. So when I am here with you, I am with you, and I manage the position from A to Z. But when you you're somewhat constricted because you have about an hour and a half to perform, and while I at times do let positions run, I prefer just to have a clean slate. Once I stop streaming, then there's nothing running. So perhaps today would be an opportune time to show you some of the preparation homework that goes on behind the scenes. So, for example, what you're about to see, that alone took me about an hour and a half. And that's just a fair amount of time consumed on one task. And the irony is that it doesn't necessarily have to yield anything either. It may not. But what I asked myself a hypothetical question, and it was as follows: what tends to happen on the Thursday when you have non-farm payroll the following day? And so I decided to look up every single Thursday/Friday in non-farm payroll, going back to 2022, which will basically be 3 years plus half of this year. Now, I may miss a trade here in the DAX, but I think it is perhaps worthwhile going through it. And so, and I hope you can see this clearly, and if I put a laser pointer on, then maybe you can see it clearly for yourself as well. So here is the 6th of January, which is a Thursday, back in 2022. The market opens gap down, and the first bar is a bull bar, and the second bar is a doji, and then you got a bear bar. And it's not because I particularly want to discuss any particular technical merits on this chart. Rather, I was just interested in, from my preparatory, shall we say, my preparation for the trading day is centered around, well, what did it look like, 3.5 years ago? What kind of trading day can I expect when you got ECB and you have non-farm payroll the following day? And as you will see, okay, so there was a gap down, and within about 40 minutes of trading, the market made a low for the morning, and then we pushed higher. And I note that the second 10-minute bar seemed to be a good proxy for a breakdown short, at least in this case here, and that the fourth bar marked a low. I also note that once you had two consecutive bull bars on the 10-minute chart, which this is, then that seemed to be a fair, good approximation for continuation. But that didn't come until 2 hours into the trading day. So I just make some observations, and it appeases my mind as to not necessarily what I can expect, but, well, how would you react to this stimulus or what you're seeing on the chart? Would you have sold short here? Okay, well, if you had sold short here, which would be in the school run short, how would you have handled it if you then had to flip the switch? Could you have flipped the switch earlier? And then I go through and I simply take month by month for the next, what would be the essentially 36 months plus another 5 months, although there has been 1 or 2 holidays, because sometimes the Thursday falls at the May Day in Germany. Let's look at the next one. Okay, so here you have a small gap down from the Wednesday, and the market closes at its lows on the first bar. and essentially the high of the day is made in the first bar. And you go into a protracted sideways range after the second 10-minute bar, and then finally you break down later. Okay, well, how would I have handled this? Okay, and can I expect a trend day? Can I expect a sideways range day? What kind of day am I headed into? Now, I do this on practically every single trading session for many instruments, which means that there's a fair amount of work that goes on behind the scenes. Now, sometimes I'll crack jokes and sing Autobahn, but in a funny sense, that's sort of an outlet for the intensity of the preparation. You sort of have to just do, which I need, because trading can be quite taxing and stressing on the physical well-being, and it's nice just to go, okay, just take a second here and just be a little humorous. I am watching the market on my other screens, just so you are aware of that. Okay, and we have 4 minutes left of the second 10-minute bar. Yeah. So this was February 2022, and so I asked myself this sort of a very simple question. Well, how would I have dealt with this? How would I have attacked it? And I often do that by putting a piece of paper over the rest of the day. Okay, well, how would I have dealt with that? I just saw that. Would I have sold short below the break? Would I have been able to sit through the next 40 to 50 minutes before the market finally broke down? Would I have added? How would I have dealt with this? What if I had bought here? How would I have dealt with it? Then going to March, and I'm not saying that we need to go through every single one of these, not by any stretch of the imagination. So in March you don't have a gap at all, you have 2 bull bars, but the market doesn't really do much until the market breaks the third bar and the second bar and then the first bar. And then it produces a fairly substantial move lower. So again, the high of the day, ignoring this spike over here, is produced in the first couple of bars of the day. Okay, let's if we look at the 3rd of March 2022, you are entering into a protracted range ahead of the ECB announcement. And then you have the ECB announcement, and it is just wowzers. And this kind of move is the kind of move where you almost want to have your mind prepped for this possibility, and so that if you begin to see a continuation of bear moves, that you are not afraid to jump on board and enter that trend. The reason why this is in red is because that's just what happened down here. I just couldn't fit it in, so I took what was down here on the following day and put it up here. Yeah. Right. I just want to pause this for a sec and show you what is happening. So far the DAX has made a big push higher on bar 1 on the 10-minute, and within 30 seconds or so we're going to see a completed second 10-minute bar, which so far isn't looking overly convincing. Now if I took you through this very quickly, and I can always go back to it, and you say, okay, well, what if we did have the second 10-minute bar, or perhaps the third 10-minute bar pegged as a potential? How would it have looked? Well, you didn't see much of a break, so you could have used the third 10-minute bar as the break point instead. And here it would have worked very well. Here it would have worked very well. Here it would have worked very well. And so if the market didn't breach it on the third, and noticing that the current second 10-minute bar today is an inside buy of the first, well then that scenario does seem to work well. Would have worked okay here. It would have worked okay here. It would have not worked here if you'd gone long, and you would have been in for a what the hell's going on here. But if you were prepared to flip the switch and use a 1-bar stop, a 1-bar stop is essentially a stop loss where you say, okay, if I'm shorting here, my stop loss is here. Or if I'm buying here, my stop loss is here. Here. And so trading is really about aligning your mind to what the market wants, which is a big challenge, because subconsciously we want to enforce our will onto the market. And having this kind of preparation helps me achieve that objective. So we're going into 2023. This is a bloody nightmare, as you can see. But it doesn't get any better during the day. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So you have an hour and a half of the market just trading sideways, and then you finally break out. But it's hardly the breakout of the century, only to come back into the range later. Worked well here. Third bar was an inside bar of the second, which is currently what's taking place. And then you have an attempt to break higher, but it fails. So DAX is now breaking out. And so we are breaking above the high of the second bar. So the DAX is now a long. Basis this research, whether you take this trade or not is up to you. I won't take it in here because I like to impart this lesson to you, but what you do for you is, well, entirely your decision. But if you do go long here, then the stop loss has to be below the low of bar 2. So you can enter with a long around 295 with a stop loss around 265. So I put an X here because this was a day where the DAX was actually not open on the Thursday before, and I think it's because Germany has in May have this kind of a Labor Day, and that's why there was no. So I just put an X, so just ignore this. You can see the date here at the the last trading day is the 6th of April, and then the next trading day is the 11th of April. The third bar is in the inside bar of the second bar, and so it would have worked well to be a buyer here. Here is an absolute nightmare, and that's just the kind of trading price action you have to accept. Well, okay, do I even want to flip the switch? If I'd gone long here, and it's important not to just filter these out of your consciousness, but to say, okay, this could also happen. So right now the DAX is marching ahead. If you took that trade, you will be up about 10 points. It probably won't go very fast on a day like today, but I want to show you some examples where you just want to make sure that you're on the right side of the market. So if you took a long position here, you'd be out of luck. But if you had to flip the switch below the entry bar here, well, then you just nailed pretty much the high of the day, and you caught yourself a trend day. Excuse me one sec. Sorry about that. It was just someone knocking on my door. Where were we? Yeah, okay, so you may actually have as your idea of trading, well, actually I'm going to add to the DAX every 10 points because in the event that we're going to get a trend day. So you'd be long from 95, 05 and 15. So you would have added twice now. And you will attempt to move your stop loss up to the best of your ability. Because if you do get a trending move, it has stickability. So just be mindful of that. I'm actually aware that on this outlet I'm missing that trade. I know, but I just think this is such an important lesson for me to impart to you. And I am trading it behind the scenes, but I can't do that with you and then also go through the PowerPoint. So what I do behind the scenes, well, I think you can sort of guess what it is I'm trying to tell you anyway. So whether you take it or not, of course, that is entirely up to you. Yeah. So let's go through. So we're coming back to, so now we are in August, and so the second bar worked really well. And this is the kind of move you want to be on board with, and you want to have added to it if you can emotionally stomach that. didn't work very well here, not at all. You had 2 or 3, 4 bear bars, but if you had an entry down here, well, you would here you'd be thinking great, and here you'd be thinking shit. But that's where the flip the switch is obviously also a vital part. But flipping the switch is an emotionally difficult, because you are being asked to do a complete U-turn. But it's also an extremely valuable exercise because it forces you not to be married to an opinion when you trade. Okay, so then you have a gap up from the previous day. The second bar is, well, the market is exhibiting strength right from the get-go. And I like to use visualization as an exercise, and I sometimes, frequently, I say, well, what if I'd added here, 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 and that's like a adding every 10 points. How would I have dealt with that? But you have to have that flexibility, and you will have days where the market then just goes into a trading range and you're not really sure whether you're coming or going. So you will notice in the DAX right now that it just reversed back down. But that bar that you're currently seeing, the current 10-minute bar, that bar has another 8 minutes to go. So unless it begins to trade below 3, in which case where your stop loss would be, you just have to accept that there will always be overlap bars. Always take practically any trend and you will have overlaps. It's rare that you just have a market that goes up with no overlaps at all. I mean, I'm in a FTSE position and I had a big old overlap and I was up 12 points and then I was just up 1 point and now I'm back up 10 points. And that's part and parcel of the game that we are playing, and you have to emotionally be robust enough. And if you're not robust enough to do it, then practice trading it in smaller size so that you do become robust enough, so you build up that robustness. Be patient with yourself, because robustness will come in stages, and you'll feed off the success that you have. This is December 2023, just thinking, fudge me, man, you just don't want to be caught in something like this, right? You just don't. And if you sense that this is a market that is just going nowhere, and how could you sense that? Well, maybe you're looking at the size of the bars, maybe you are looking at the extreme amount of inside bars, inside bar, inside bar, lots of overlaps. Maybe you just say, you know what, I'm just going to sit this out and go and have a cup of coffee, whatever your poison is. Yeah. Okay. Here would have worked for 1 bar, after which you would have been stopped out. Had you flipped the switch, you'd be thinking, what the hell? And then if you had flipped the switch here, maybe you would have said, I'm going to have a stop loss up here, and you'd be sat through something. But there's really no way of protecting yourself against something like this. We all like to think that we can be smart enough just through our analytical prowess to just catch these moves. But the fact of the matter is that any trader worth their salt will have to accept that this is part and parcel of the reality of being a trader. So if you're looking at the evolution of the DAX over the last 5 minutes, you had what seemed to be a really strong push higher, and then the market came down, came all the way back up again. So you're thinking, oh, it's looking okay now, and now it is looking bad again. But there's still 5 minutes to go of that current 10-minute bar. And so this may very well very quickly be developing to one of those fog fests where the market is going to go into a sideways trading range. And it is entirely possible. But just know that you have done what you had to do. And there was nothing else you could have done about it. You couldn't have anticipated that this would be any different. There's no amount of analysis that would have protected you against this bar reversing against you. You took a long position around 95. I took a long position here in the FTSE earlier, and as you can see, well, my profit has been as high as 12 points, and right now it's just 4 points. But there's no way that I could have somehow envisioned that this market was going to do what it was going to do. So part of my preparation is just to prepare my mind to, well, this may be a reality of what you're headed into in battle today. And just hope and pray that it's going to be, say, one of these days here. And if it is one of these days here, try and make sure that you cream it for all it's worth. Don't be in a rush to get out. Just try and ride it. Want what the market wants. And if you do get caught up in something here where initially it looks good, but of course it depends entirely on how you want to trade. If you are more interested in going, oh look, I'm gonna be more of a scalp type. I mean, for example, when you see Al Brooks and his contingent of traders, Rose, Tim, and Brad, you know, they're very nimble, I think is the right word, and they rarely you'll rarely see them get into big trouble. In fact, I've never seen them get into big trouble. It's like, okay, yeah, out. And I may be talking out of terms, but on the other hand, I don't necessarily see them being a buyer here and then adding and having a real. But that's not a slight against them or anybody. It's just, well, you have found how you want to trade. You found your niche. So, you know, if you're content with that and you're happy to expand your abilities within that confinement, well then you found your niche, and that's brilliant. There's nothing more for you to do except to keep on top of your game and try to bring your A game every day. And so this is by no means a verdict to anyone, because perhaps trading the way I don't do it so much when you're watching, but perhaps trading the way I do, yeah, you have some really big reward days. But up here, it's not like I know that the market is going to reverse. And if I had added, my positions are very quickly turning sour. So the irony is that I really need moves like this in dollar yen. And yeah, it was a big payday. It was an enormous payday. It was like one of those, I think it was about 45,000 pounds. And so a significant payday. But before you denounce me as a show off, let me just point out to you the amount of time that I have had to see a big profit disappear. So it's par for the course. And now look at the DAX again. sort of in the closing seconds of this market actually wanted to try and get a really positive, but within the context of these 10 minutes, it must have been a tormentful experience for you if you're not mentally prepared for it. And even if you are prepared for it, good trading is always uncomfortable. It just is. If you're comfortable with what you're doing, you're probably not doing it to the full extent of your ability. I have a saying on my desk, and it is a very, very hard-earned saying. It says, when you think you're done, you're only halfway done. And so now the DAX is breaking out to the upside, making new highs for the day. It didn't look like that 7 or 8 minutes ago, did it? 7 or 8 minutes ago, it looked like, oh my God, my position that I entered is in the shits. And now all of a sudden, life is very rosy again. My saying is, when you think you're done, you're only halfway done. And it's a lesson that I have learned from observing how my own psyche operates. The mind gives up before the body. The story itself isn't particularly interesting, but I'm happy to tell you. And maybe it's, I don't know, how long is it ago? 2012. So it's like 13, 14 years ago. But I'm doing a physical exercise, and I'm doing it with a trainer. And I'm doing a particularly hard piece of exercise. I think, actually I'm lying, I know it was squats. So I'm squatting, and I'm squatting with weights. And the goal is to do 20 squats. And he says, I want 20 squats. And so now my mind has accepted, we're going to go through pain till 20. And so we begin, and my mind is looking forward to and counting down to 20. 8, 9, 10, come on, you got this. We get up to 17, 18, and now my mind is like, oh, just 2 more. And then I can energy preserve. It's called the energy paradox. Now I can energy preserve. And then the coach says to me, no, I want 20 more. And my mind immediately just goes, fuck off. And he says, stay with it. Just stay with it. Just do it. Don't think it. Just get down there, get up again. Get down there, get up again. And within the next minute and a half or 2, what I thought was the limit of 20, because that's what my mind had been conditioned to, was no longer the limit. The limit was now 40. And at 40, I was really done, ladies and gentlemen. I really was. Then my body really was, okay, and I could probably have done a bit more. But now when I was reflecting on that incident, I realized my mind gave up before my body necessarily was tired. I am sure that this story is a lot more interesting for me than it is for you to listen to. But perhaps you could try and find yourself a similar situation, or put yourself in a situation, and maybe just hope and pray that someone is there to say, no, you're not done. And I observe it all the time. Don't think that this is a one quick fix. I observe it all the time, and my second book is all about this topic. I take regular gym classes, and one of the things that they like to put us through is that you do 45 seconds full on, and then you do 15 seconds rest. And what I have observed in my fellow participants is that as we're counting down from the 45 seconds, as we come down to the 10, 9, 8, 7, 6 seconds, I notice that they are looking at the clock, and about a second or two before it strikes 0 or 45, depending on how you look at it, they're like, oh. And the way that I max myself out is to say, it's not one set of 45. When it hits 0, you have to do another 45 seconds. I will allow my mind to look forward to the end. I am fully aware that here publicly I'm missing a good move, but perhaps you should reflect on this as, yeah, maybe I am, or maybe I'm just also passing on a really important lesson about trading. And I'm capturing this move behind the scenes. And I got my footsie here, although it's no biggie. So my preparation is a warm-up for my brain. That's what I consider it. In itself, these charts have very little value. They have the value that I assign to them. Okay, well, what would I have to put myself through to be able to capture like this? Well, first of all, I need to have faith in it. I need to have the will to act upon the information. Then I have to see out any moves against me, but not try to be tricked out. I may have to suck up a sideways trading move. I may have to endure the market going into a trading range and stopping me out on an otherwise pretty good position. There's no end to what the market could put me through, such as what you're seeing in the DAX right now, where you have higher lows on 1, 2, 3, but right now bar 4 is doing a significant move back into the range, overlapping bar number 3. I'll take you through a few more. Here, bar number 2 worked well. And the low of the day was actually at the beginning of the day. Here, you are in for a world of pain. Up and down, painful as it is. And here the high of the day actually comes later in the session. So as I went through the months, it became clear to me that there's an even mix of, oh my God, what is going on? To, oh yeah, brilliant, love it. We all want this. We don't want this. We all want this. And we don't want this. We want this. You know, to some extent, we are now in October 24. We're coming up to the completion of the research. And then we go into this year. Lots of overlaps. This actually looks remarkably like what we are doing today. We had a gap down, big push up. Market is pushing up, but is then settled into a trading range. We don't know whether that's what's about to happen here. But at least we have to be mindful of that. What really sets the tone was that we began to trade below prior bar low. Which doesn't happen so much on days where it does work out. So that was a completion of bar number 5 on the 10-minute chart. So far, the high of 2 is higher than the low of 2 is higher than the low of 1. The low of 3 is higher than the low of 2. The low of 4 is higher than the low of 3. And the low of 5 is higher than the low of 4. Yeah. Here would have worked quite well as well in February 25. Oh, this is it's just I was writing to someone about it's in Danish, so you probably won't understand it anyway. That's not so relevant to us, but there you go. Here's bracketing the second 10-minute bar. Yeah, so I think it's the last one coming up here. Yeah, that's it. So there you go. So that was the preparation in one index. So here we are. Now I don't know whether you are long. You shouldn't be short, that's for sure. But don't know whether you're long or you decided not to take the trade. Entirely up to you. I did my bit. So there you go. So it's a bit of a different kind of trading session with me this morning. Perhaps more focus on what goes on behind the scenes than focus on an actual trade, although I am very adamant that I just explained to you why buying above 96 was the way to go, and the reason for that decision. Okay. I said, yeah, a short session indeed, but nevertheless an important one. I will leave you to manage your own trade. We have a couple of odd days in front of us, I think, because of the ECB coming out later. But even though that we got non-farm payroll, and even though we got ECB and press conferences and whatnot, we're still able to just navigate the market using historical patterns and using the right kind of mindset. So with that in mind, I'm going to bid you adieu for this morning, and I will see you for the US session later on. I hope that you would listen to this recording from time to time. I think it has been an extremely valuable one, personally. Thanks a lot. Bye-bye for now.